Hey everybody, how you doing? This is Uncle Bruce here with Stock Markets with Bruce. Today is August the 7th here in Tokyo, Japan. August the 6th in America right now. I'm ahead of you. How about that? Welcome all to the video. Today I'm going to talk to you about why Gamestop is going to go up in price about a month from now, and why you don't need to own any shares to enjoy the upside. You can be paid interest and make interest on some money you have, and get paid to not buy GameStop, or to offer to buy GameStop. It's a whole different thing. Let me tell you something about what's going on here. GameStop is a company that has completely changed back in the day from when we first heard about it in 2020, 2021. Back then, the whole story about GameStop was there was a big short squeeze going to happen. It was going on, and the stock would go to the moon. And lo and behold, the shares went from $2.80 in May 2020, reached the 20 level in December of that year, and then by January, February of 21, the shares broke the 100 level, the 200 level. By March, April, it had already broken the $300 and $400 level, and then came back down to about 150. The stock was split 4-for-1. So that every share you now had 4 shares worth $37.50 each. And that happened in about 2022, and the company started raising a bunch of cash to bolster their finances. And they have been on a tear lately. The last couple of years, they have been offloading underperforming stores. They've sold off the Canadian division, the French, the Swiss, the German. All of their European operations have basically been shut down. And they're closing stores in the U.S. at an accelerated rate. Apparently, in the first quarter of this year, they shut down 400 more underperforming stores. They're down to the low 3,000s now, 3,200 stores left out of 5,500 at one time. But the stores that they have are profit centers. They're not loss leaders. And the company has shifted in what it's selling. They now have still gaming, but their number 2 item, the number 2 most selling product they have, are collectibles. And these are beginning to dominate their financials. Used to be you walk into a GameStop store, something like maybe this one here, I'll show you in a second, and all you would see are games. Now you walk into a GameStop store and you see plush toys, sports cards, collectible cards, figurines, just all kinds of collectibles. And the key here is that collectibles make a lot more money for this company on a percentage basis. Every dollar they bring in on collectibles has a much higher yield than profit yield than any of the electronics that they used to sell. And so they've done a masterful job at now turning these stores bit by bit into a collectible center and gaming center, attracting girls and boys and women and men of all ages into this door. Something else this company did not too long ago, they moved into the crypto market. They picked up about 4,715 Bitcoins. My guess is they paid $80,000 a coin, but I can't tell you that for sure because it hasn't been disclosed. It's about to be. We're going to find out very shortly what they paid for the stock, for these coins. And when I tell you the date, I want you to understand that that is the date that this stock could already be on the move by. This gentleman right here, this gentleman is named Ryan Cohen. He bought up 14% of the company when it was sitting around $6 to $16 a share back in December 2020. And he's the largest shareholder. He's the CEO. He's the chairman of the board. He does not pay himself a salary, and he does not have stock options to run this company. He basically is working for free to better the value of his 14 million shares. And he has guided this company through a lot of store closures, big reorganization in what they're selling, and now a huge cash pile of in excess of $9 billion. This number is significant because $9 billion in cash happens to equal $20 a share. for all the shares that are out there, 450 million shares. Divide that into 9 billion plus, you have a $20 stock in cash value, just cash. A little thing to show you here. I have a chart here. It's a 6-month chart, I think. Let me check this one out here. This is a chart of the stock over the last little while. This is a 6-month chart, and on the left-hand side, you can see the beginnings of the trading range was 25 to 30, dipped under 25 around March. Then by the end of March, it had a bit of a jump and a pullback. April, back into the 25, 27 range. By May last year, this year, May, sorry, broke 35 for a moment, came back into the 30 range, dipped again. That last dip you see there where the letter E is, and that big spike in volume on the bottom there, that was between June, early June, mid-June. That's when the company raised another couple of $billion, oversubscribed, and puts them at $9 billion in cash. We have not had an earnings report yet with the company sitting on $9 billion cash, and their collectibles and their Bitcoin investments. So we've got some information to learn about here very shortly. Now, I could sit here and tell you, I think what you should do is go out there and buy the stock because it's a $22 stock right now, and the shares are worth $20 in cash, so that the entire business is worth $2 something cents a share. And I think it's worth much more than that. I could tell you to do that, but I'm not going to tell you to go out and buy this stock right now. You don't need to buy any GameStop to enjoy a little money in your pocket. You can actually offer to buy the stock at a price, let's say $20 a share, and you'll be paid money to offer to buy the stock at $20 a share until, say, next January. How does that work? It works because you're going to write a cash secured put, and you're going to haul in some money to do this. Now, let me show you a little presentation here. This little slide that's going to pop up here in a moment. This here is a pricing, this above my finger here, right up here, that is the 2281 in blue. That is tonight's close, August the 6th. That's when the stock closed at 2281. And above that number is 22 and 20, and below that number, 25, 27, and 30. Those are values, the contract values for put contracts for GameStop. Now, if you were willing to buy GameStop at $20 a share, you could be paid $4.90 a share. If you take a look at the number $20 up at the top there, you'll see that number $4.90 beside that. If you're willing to buy the GameStop shares until January 2027, you would be paid $4.90 in cash right now per share. And since these contracts work in 100 share increments, in other words, what you would need to do is you would need to put up $2,000 with your stockbroker, and you'll sell this contract for at least $4.90, and you will have $490 in your brokerage account on top of the $2,000 to pledge to buy this stock at $20 a share. Now, if the shares are 22 right now, no one is going to make you buy the stock at 20. I mean, what, are they crazy? They can sell it in the open market for $22.81. Why would someone sell you shares at 20? In your case, if the shares stay above $20 a share until Jan 27, or as of Jan 27, you get to keep all $4.90, and you can now turn around and write a new contract maybe till January 28 if you want. If the shares do go below the $20 mark, they reach $19.50 or something like that by January 27, a long time from now, you might be made to buy these shares at $20 a share, except that you get to keep the $4.90 you already got. In effect, you take $4.90 away from $20, and what do you get? $15.10 a share. That's what you're actually buying this stock for by writing this $20 cash secured put contract. In the meantime, depending on which brokerage firm you're with, you can earn daily interest on the $2,490 in your account just on one contract. Now, if you did 10 of these contracts, you would need $20,000 to buy 1,000 shares at $20. But you would get paid $4,900 in cash to do this. You would then have $24,900 earning daily interest between now and Jan 27 if you didn't buy back the contract in the meantime, which you have every right to do anytime you want. Now, if the earnings coming out in September are good, and I think they will be, and next January, February, the earnings come out for the end of the year and shares go even higher, these shares reach $30 a share. Those $20 contracts, those $4.90 contracts you sold, will be worth nothing. They will have virtually no value anymore because no one in their right mind will sell you stock at 20 when they could sell on the open market for 25 or 27 or $30 a share. That 490 is all yours. In other words, it's a $490 return on your money plus the interest you've collected in the meantime. And at 4% a year, we're talking about $1 a share in interest for the next year you're going to generate. In other words, you'll have 2,000. You'll get $1 a share. That's if you do one contract, that's $100 in interest. So that's like getting $590 for that $490 contract. That's close to $6, and that is 30% return on your investment for the next year to not buy GameStop. Now, if the shares do go up to 25 or 27, you can buy back the $20 put for a much lower price because it'll collapse in price. And you can turn around and write a $25 put contract or even a $30 put contract for much more money than it'll cost you to buy back your 20. And that added cash will be added into your account and you'll haul interest in on that. There's no need to buy the stock if you're going to write a cash secured put. Fascinating way of making money in this stock market. Option writing is an excellent way to bring income in a conservative way. All pension funds do it. All hedge funds do it. Mutual funds, ETFs, they write contracts all the time. It's a conservative way of raising cash. If you want to learn how to write stock options, head over here to my website. It's called stockmarketswithbruce.ca. There's my mugshot there on the front of that webpage. Stockmarketswithbruce.ca. There is the web address right there. And head over there and you'll be able to pick up some classes that I've created, all in really plain English on how options work, what are call options, what are put options, how do you write them, how do you close them out, how do they go up and down in value, the psychology of the market. Here's class 1 and 2, for example, right here. These are the first two classes that anyone would grab if you want to learn how to become an option writer and earn income on either stocks or ETFs you already own, or write options on stocks without even owning the stocks. Just like GameStop, you don't even have to own the stock. Lesson number 3 here is 3 and 4 are available here. They are covering stuff like using aggressive trading strategies to profit from stock options, or aggressive strategies to profit from the writing of options. Classes number 5 and 6 cover winning strategies new investors need to know, common mistakes that some folks make in investing, stuff you need to know. 9 and 10 here, how to trade call and put butterfly options. How does Bruce pick his favorite stocks? It goes on and on. There are 19 classes now. I've lost track. There are 19 classes available. You can take them in order or pick up the one that interests you the most. It's totally up to you. Poor man covered call writing might be lesson number 11 for you. Rollover strategies, lesson number 12. Very important topics to understand. 13, 14, on they go. Stink offers and stink bids. What are those? Psychology of the markets. How to maximize profits from the writing of stock options. How to bring in the most dollaros. Advanced poor man cover call strategies. How to use other people's money. Those are iron condors. How to do credit spreads and iron condors. Very entertaining class. That went over very well with my students. 17 and 18. How to fix option trades and add cash with smart spreads, and how to maximize stock option writing profits. Part 2 there. Very important tips. Yes, never ending. 19 lessons to enjoy. you pick them up. If you ever want to do a one-on-one session with me where you and I are on camera together, I offer those as well. In the website, you'll find instructions on how to reach me and how to get together with me for a one-on-one. It's up to you if you want to take this further. You can tell me about your situation, tell me about your investment history, where you're at, what you've got, what your risk tolerance is. We'll figure it out together. These sessions last an hour and a half, and they're available. They cost $500 US each. I can tell you that it is the cheapest $500 you're ever going to spend, because by the time I'm finished with you, you will have thousands of dollars of knowledge more than you had when we started, and they go over very well with my viewers. Thank you for joining me tonight. GameStop, they're coming up with their earnings early September, a month from now. I think they're going to be fantastic. They're going to divulge how they're doing on their crypto. They have to. If they're up 25, 30,000 a coin, that's 140 million in profits that they're going to register. They're going to register tons of money in interest from the $9 billion in cash they're sitting on. They're hauling in now probably 5% a year on that money, which is $450 million a year, $1 a share per year being made in interest. Right there, the company, the moneymaker, and then the stores themselves. So we'll cover that between now, between now and September, early September, about the 9th, 10th. I have a feeling these shares are going to run up in price. I don't think they're going to be anywhere down here at 22. I think they're going to be in the 28 to 30 level, maybe higher, before the results even come out. Then we get the results. We could go beyond that. So if you have written cash secured puts at 20 or 22 or 25, you are going to be very glad you did, and you're going to be in very good shape, even though you don't own a single share of GameStop. I hope you found today's video entertaining and interesting and informative. Thank you for the thumbs ups. If you can spare those, please do. Subscribe to this channel. And if you want to grab those classes, head to this website right here, stockmarketswithbruce.ca. And if you want to do a one-on-one with me, whether you take the classes or not, I'm more than happy to talk to you about your investments and what your possibilities can be. We'll go over all of it together. Thank you again. We'll catch you next time here on Stock Markets with Bruce. This is Uncle Bruce saying goodbye from Tokyo. Until next time.